Welcome back, everybody. Thanks for joining us in this session. This is Advisors as Digital Asset Champions. It is going to be moderated by my good friend, David Canter, EVP and head of the RIA and family office segments of Fidelity. David, take it away, and I'll see you at the end of the session.
Well, thanks, Rick. We're pleased to be here, and congratulations on all the success with the Vision Conference and everything that you and the team have done here at the DA CFP. So I will tell you that one of the most common questions that I get from advisors is, how do I get started? And I know Rick and I talk about that a lot. So I am thrilled that we have Michael Greenwald, who is the Director of Digital Assets Education at Tiedemann Advisors, to give us a peek behind the scenes about how his firm did it. And we're also joined by my very, very good friend and colleague, Christine Sandler, who's the Head of Sales and Marketing at Fidelity's Digital Assets. Because another common thing we hear from our clients is they appreciate Fidelity's perspective as a traditional firm, because we've spent years researching and developing our digital assets capabilities. And not to steal her thunder, Christine brings a similar perspective to today's conversation, having started on the traditional side and then taken a deep dive into this emerging space. So with that, I'm going to ask them each to provide a little bit more about themselves before we get started. So Christine, can we start with you?
Happy to. Thanks, David. Thanks, Michael. Really happy to be here with you. As David said, I'm responsible for sales, marketing, and the research function at Fidelity Digital Assets. I joined the company a little under 3 years ago from a competitor, Coinbase, and prior to that, I spent about 30 years in traditional finance, mostly around the electronification of the equities business. And what we provide at Fidelity is the infrastructure to support family offices, registered investment advisors, and other institutional players to hold physical Bitcoin in their portfolios. And I can pause there and pass it over to Michael.
Thank you, Christine. Michael.
Sure. Thanks, Christine. Thanks, David. It's great to be here. I've been at Tiedemann Advisors just under 5 years, serving now as the Director of Digital Asset Education. Prior to that, I spent almost a decade at the U.S. Treasury as a diplomat in the Middle East and working in Europe and Africa on countering illicit terrorist financing. And I remember when virtual currencies, which what they called them at Treasury, was discussed in the early 2010. So it's at Tiedemann, I really work with families to understand what this digital asset inflection point means. What does this transition mean? And arm them with the best knowledge about what's best for them moving forward. So great to be here, David.
Oh, fascinating story, Michael. Let's start with you to stage the discussion. Your firm, Tiedemann, has a director of digital assets, which is fascinating to me. When did the firm start exploring this space? What questions did you have initially, and how has your perspective evolved? So if you could share a little bit with us.
Sure. So I think it's, with regards to digital assets, we've been focusing on fintech for many years, and this is really a technology adoption. So we've had investments in the technology adoption space for many years, and that's something that our families have been exposed to and continue to deepen that. I think when it comes to digital assets, really, I would say maybe a year and a half ago, we began the conversation that clients were asking more about what this meant. And so we really take them on a journey to understand, where are we? How did we get here? What does this transition mean? And I think most importantly, what does the future regulatory environment look like? And where are the opportunities? Where are the risks? And what does it mean geopolitically, not just in the United States, but what's happening globally with central banks?
Interesting. Well, you used a word there, adoption, and I've certainly had a front row seat with Christine as some of our clients have thought about how to adopt, this asset class. So, Christine, what have you learned from the early days from where we are now?
That's a great question, David. And it's been great to be part of Fidelity and part of this journey. So having a bird's eye seat in terms of diverse client types and their adoption strategies. But with respect to advisors, I think this has been it's been really an eye-opening experience, because I think many advisors were initially reacting to the demands from either individual clients saying, look, I have an interest in this space, and I'd like you to help me understand this. And let's say it's just Bitcoin. what is Bitcoin's role in a portfolio? And so the client ended up putting the onus on that advisor, and the advisor kind of took the journey along with the client. And what we found was that use case kind of broadened out to include additional clients, where the advisor was maybe considering, what is a comprehensive approach to adding Bitcoin? What does that look like? What kind of impact to that client's portfolio or many client portfolios? And then what's our firm position with respect to the asset? And so I think we have been hopefully very helpful in helping clients either validate their own investment thesis or provide tools to broaden access to digital assets, whether they choose holding physical Bitcoin or whether they're looking for an exposure product like a fund vehicle.
So let's stick with you for a second, because I know just like Rick and Don's organization has done, we've done a survey at Fidelity, the Digital Assets Institutional Investor Survey. And if my notes are right, 43% of US financial advisors currently invest in digital assets. Can you unpack that a little bit for us? How much do you think is advisors investing their own money in digital assets versus that on behalf of clients? And then I have a quick follow-up before we toggle over to Michael.
Yeah, no worries. Look, I think the digital assets survey is something that we're very proud of at Fidelity Digital Assets. So for the last 3 years, we've been querying lots of different types of institutions as to their sentiment around digital assets. And what we're hoping to get to learn is, look, what are some of the obstacles? How are they feeling about digital assets and the role in the portfolio, so that we can kind of sharpen our vision from a product standpoint and also from a go-to-market standpoint. So with respect to advisors, I think we were pleasantly surprised that the numbers coming from the advisory segment were that strong. First of all, I thought from both the family office and the registered investment advisory segment, they were extremely strong. And that really underscored that demand that's coming from their own clients. So we knew that this was validating what we saw in the field. And that's also going to help us kind of sharpen our focus and put additional product in market. And when we think about, to your question, is it advisors deploying their own capital, or is it on behalf of clients? It's a bit of both. And I think what we've seen is a broadening of the use case, where at first, perhaps an advisor is looking to kind of accommodate a client. And then that becomes maybe a broader use case where they're advancing into things like tax loss harvesting. And so we start to see a broader use case, and we start to see the advisor having the ability to have an opinion on digital assets, be able to bill on digital assets, and also incorporate them into a broader portfolio view.
Interesting. Let me toggle over to Michael, because Christine, you answered one of my questions. But for you and your practice, Michael, at Tiedemann, how common is it for advisors to be offering digital assets? Is it in every portfolio? Is there a typical client profile that you look after?
Well, I think some families are at more advanced stages than others, and we work very closely with Fidelity and Christine and their team when clients want to work with Fidelity Digital Assets, especially in these early innings. So they're a key vehicle for us. I think with regards to digital assets, it's still very early innings for us for any specific portfolio recommendations. I think that will come with the regulatory regime. So we help clients first understand the 3 buckets, really, David, right? The crypto, the stable coins, the central bank digital currencies, and try to really educate them on how they're all going to live alongside each other. And so some come to us with current allocations, and we can provide some context and guidance. And then we can provide where we may be increasing allocations in technology investment. So I think there's really 2 different discussions, right? There's how can you deepen your technology investments that touch digital assets? And then what does that digital asset portfolio look like? And I think in the family office space, it's still happening on an individual client level. It hasn't really become institutionalized yet, especially at Tiedemann.
Interesting. It's just fascinating to hear you describe that, the three buckets and the technology. But let's stay on barriers for a sec. Maybe I'll start with Christine. Some of the barriers we've heard are regulatory barriers. Michael certainly touched on that. Other barriers are price. Talk about the environmental concerns and the ESG concerns with respect to, digital assets. What are you hearing?
Yeah, so David, it does. So we find that there are a number of obstacles, and those obstacles kind of do change over time. So we find that certain obstacles kind of bubble up over time. ESG was a primary concern, I would say, in the spring of this past year, as well as, and it continues to be a focus. And I think one of the key pieces around ESG was really the inputs for mining operations. And quite frankly, there was a lack of transparency as to how miners were sourcing power and what types of power they were using to kind of fuel their mining operations. And I do think we've seen a pretty significant change and an evolution of mining that left China and has moved into other jurisdictions, namely Texas. So, Texas is now, I think, responsible for something like 34% of all global mining, which gives us the ability to have greater transparency into the environmental impact as well. So we have some certainty as to the types of power that power inputs that miners are using. So typically it is flared gas or renewable. And so it's a little more environmental, it's more environmentally friendly. And then we also have the transparency around kind of measuring that. And I would underscore that there was a great focus on the E portion and a little less of a function on the S and the G. The societal impacts of Bitcoin in general are potentially tremendous. And I think we take a very privileged view because we have a stable currency in the dollar. We don't have, while we may criticize our central bank, I know, Michael, you can pick up where I leave off. We have relative stability with respect to the dollar. We do have access to the banking system. That's not true globally. So the societal impacts of Bitcoin and digital assets are potentially very great. I'll pause there and let Michael pick that up because I think he has something to add.
Well, I was going to say,
Go ahead, Michael.
David, I think on the ESG perspective, sure, one argument is the energy side. And listen, Ethereum is heading towards an incredible inflection point if they're able to implement their 2.0, which many people are waiting for, and that could be really quite a force and movement for Ethereum moving forward on the energy side. And what we try to do with our families is provide a lot of literature and education for them on the ESG side. Another big piece is the inclusion part and the equity part. And so many families that we speak with care a lot about financial inclusion and equity and privacy. And that's a question really for what our future regulatory environment is going to look like. As Christine said, yes, we are a dollar-centric global economy, but the dollar's role, even though there's no alarmism here, it is decreasing. And central bank dollar reserves 25 years ago were 75% of the global central banks, and they're below 60% right now. So I think regulators in the US, I think you do need to be mindful not to be complacent with regards to the dollar. And I think, David, that we're in an era of dollar dominance. We have been since 9/11. And I do think we need to innovate to an era of dollar innovation. And I think what you're going to see when the Fed comes out with their white paper is that innovation starting to take form.
Interesting. So we have an audience member who asked, what is ESG? And I'll answer that on our collective behalf. And that refers to the doctrine of environmental, social, and governance screens when looking at an investment. So thank you for connecting the dots there, because that's often a question when talking about digital assets. Let's keep talking about some of the questions around barriers and geopolitical developments. Michael and Christine, you both talked about that a little bit, but we hear a lot of noise in the market. Can you talk about some of the developments in China and some of the potential impacts about what the Chinese government has done around crypto ban, as well as on the flip side, El Salvador's adoption of Bitcoin as legal tender? So Christine, let's start with you. And then I'm going to pick up the pace a little bit. So Michael, feel free to add, but we're going to keep rolling here, team.
So I'll start with El Salvador, and Michael, if you want to talk a little bit about China, I think that would be great. Look, I think it was really a pivotal move for El Salvador to enable Bitcoin to be legal tender. And what that means is it is literally part of the fabric of that society. The question remains, will other governments allow Bitcoin to be legal tender? Perhaps, and I think that goes back to the previous point around dollar dominance. I think there was a potential concern that potentially minor currencies would compress into kind of dollar denominated entities as well. Now you have potentially an alternative to dollar denominated subcurrencies like and you have Bitcoin. So I do think that this offers the potential for for nations to actually provide access to commerce with using a different type of potentially more stable than their own sovereign currency.
Yeah, on China, David, I think what we're seeing playing out is a complete weaponization of central banks and really using it as a surveillance arm of their economy for understanding the consumer at every level. And so you really have two world views playing out. You have a new era of digital asset foreign policy, really. China, Iran, Russia, potentially some Eastern European countries who want control are going to use their central bank and central bank digital currencies really for surveillance. And then in the G7, what you saw as a communique last week on central bank digital currencies is promoting privacy and equity and the importance of cross-border. But I think what's happening in China, since their currency has stalled since 2015 and they're frustrated with the dollar, is that this is their opportunity to elevate their economy, but also their surveillance. And I think Beijing 2022, their opening ceremonies is going to be a big wake-up call of how much they're ahead of the game when it comes to digital assets.
Interesting. I'm going to come back to that. But I have an audience question here that I think is sort of an interesting one. We've touched on a little bit, but I'll ask this. Why don't we go to Christine and then Michael, if you have some comments as well. But here it is. Are you finding that RIAs that offer digital assets to their clients are investing directly in the coins, Bitcoin, Ethereum, or are they using institutional accounts and doing so through some other assets, such as private investment funds and so forth? So why don't we start with Christine and then Michael, and then there's a follow-up to this, which I think is important.
That's a great question, David, and thank you for the audience member that actually asked that. And I think at Fidelity Digital Assets, we enable clients to hold physical assets on behalf of their clients. One of the things that we didn't touch upon was kind of the regulatory piece, and the regulatory piece around providing custody to your end clients can create some sort of some degree of ambiguity to certain clients. And so I think that to the extent that a client has an opinion on whether they are providing custody under the custody rule, they may opt for a fund structure, and they may opt for an exposure vehicle rather than holding physical Bitcoin. And I think it's just a consideration. Our objective is to provide clients with the choice of an exposure vehicle that may mitigate some operational or legal reg and compliance concerns, or holding physical Bitcoin. So it really is about choice. And so it is also about kind of having that dialogue with the client of some of the potential unintended consequences of the inclusion of these assets in portfolios.
Yeah, I would just add, David, that given the current regulatory structure, we're not recommending to clients to hold the physical coin, but they are able to if they want to through Fidelity Digital Assets. And that is something that several of our clients do use. With regards to recommending, there are some private investments that we're making on behalf of our clients in the technology adoption realm, which touch it. And so, Coinbase and others were part of previous investments that our clients have had exposure to. And that's something that I think will continue. And I think as we get more regular clarity in the regulatory space, that will only increase.
Thank you, Michael. You actually answered a follow-up question from another attendee. So well done. Well done to both of you. So we touched on this a little bit, but I'm going to do one last question before we hit our lightning round, because I think the lightning round is always fun. And I have the privilege of hearing some of your responses. But here's the last question before we hit our lightning round. Back to the Fidelity study. We heard that investors are quite bullish on the introduction of a US digital dollar over the next few years. And 5 countries have now fully launched a digital currency. 14 countries are in the pilot phase, and a further 81 are exploring a CBDC, central bank digital currency. So let me just give those numbers again, because those numbers are interesting. 5 countries have done a digital currency, 14 are in pilot, and 81 are exploring a CBDC. Can you give us some perspective? Why don't we start with Michael this time, given his governmental background, on the growing interest here and which countries are likely to fully launch or begin piloting in the near term?
Well, I think, David, I think what you're seeing, given the amount of central banks and countries that are looking for a CBDC, is that they recognize this wave of decentralization, and countries are looking really to protect the future of money and what it means. And as SWIFT becomes more and more antiquated, countries need to innovate. And so I think here in the United States, I don't expect any real action coming out of the Fed in the white paper, but what I do, reading between the tea leaves, is that stable coins and crypto and central bank digital currencies, and whether it's a digital dollar now or in 5 years, they will live alongside each other, and stable coins will likely be regulated like a bank. I think if you look at the medal ceremony for digital assets at Beijing 2022, China is definitely in the lead with regards to it. Sweden and the Bank of England are doing quite well. With regards to those 5 countries, it's really going to be interesting to see what major central bank like Lagarde and the ECB take a more innovative approach. And I think it would be great if the US and the EU came together for best practices and almost created a digital asset Bretton Woods, because that's really where we're heading.
Fascinating. Okay, team, audience, we're going to the lightning round. So if you're multitasking, pay attention now, because we're looking to the future, and the future is fun. So is the here and now, but so is the future. So let's start with Christine. In your opinion, and I've heard you answer this before, what inning are we in, using the baseball analogy, in terms of advisor adoption of digital assets?
So David, you've heard me say before that I think we, if this were a baseball game, we just pulled into the parking lot. I actually think they're ripping our tickets. I think we're about to enter the stadium. So I do think that with the advent of new products, like the futures-based ETF that was launched today, we will start seeing an acceleration of adoption for US investment advisors. And I think that's underway, but I think we're still very early in the game.
And Michael, I have a different question for you. This is lightning round. We've heard a lot about Bitcoin as typically the entry point for investors. And we hear more and more about Ether. But what's next as we look toward the future? What other digital assets or products?
I think it's all about the art market, David. And I think it's the art market has legitimized digital assets. The auction houses, Sotheby's and Christie's, they are the central banks of the art world. So I think the metaverse, gaming, and the art market, it's going to bring more people into this, and they're going to see it and understand it. And Christine, I would say that they're hoping to buy the tickets online, but they can't buy the tickets for the game.
Exactly, just yet.
Nice.
Could you imagine a world with no more starving artists?
There you go.
And smart contracts for those artists so that they can get royalties in the future.
Incredible.
All right, let's keep looking toward the future. So and this is for each of you, what are the biggest digital assets buzzwords in 2022, but also 2025? We'll start with you this time, Michael.
I think right now it's the metaverse. And I think in 2025, everyone is probably going to be owning a virtual home, and we'll be showing our interior decorating, at a cocktail party about the metaverse, and it will be about getting real estate in the metaverse.
I'm going to say user-led economies. And
Okay,
I think that, yeah, user-led economies. I think there will be a sweeping wave led by gaming to create real value in terms of kind of leisure activities. And it's going to be led by gaming.
Fascinating. So Michael, this is another lightning round for you, but feel free to expound. And then I have a similar question for Christine. Your firm has done something, very unique. You've established a director of digital assets and digital assets education. Is that going to be a role at every RIA firm, just like you have a chief investment officer or chief compliance officer as we go forward?
Yeah, I that's what I told our folks here. I said by next year or 2 years from now, I expect a director of digital assets to be at every firm. And if it's not, I think the question for clients is why not? Because you're going to need expertise at every level to break this down, not just from the education and regulatory side, but really to give a compass, David, because that's really what people are looking for, is a compass for clarity.
All right, thank you. That is fascinating. Christine, this is the second to the last question, then you each have a final one. How important is an ETF in terms of gathering adoption? We've heard a lot in the news over the past several years, but a lot in the news this week, that this being today, October 19th, so fascinating.
Yeah, so look, I go back to the survey, and the survey really just underscored the fact that there's really a tremendous amount of demand for investable product, and that investable product will allow exposure in RIA, in IRA accounts, and a lot more digital asset exposure, either in small or large bits. And I do think it's a pretty critical development. And look at the enthusiasm kind of surrounding the launch of the first ETF. I think you'll see continued enthusiasm around the potential launch for a physically based ETF as well.
So before I ask you the final lightning round question, I just want to share a few notes that I've heard as we look to the future. Christine says we're at the turnstile. We haven't even entered the game yet. So, early. We've parked, but we're early. Michael says the art market and the metaverse are things that we should be thinking about. In the future, we're all going to own virtual homes and get to show off our interior decorating and, all the things that we've done to express ourselves. And also, I heard that there are going to be no starving artists. So if today we're thinking about these digital assets like Bitcoin, like Ethereum and others, we're really going beyond the Thunderdome, if you will, into virtuality. Fascinating thing. So the final question I have, and then I imagine Rick and team will join us, is, and I'll start with you, Michael, and I'll let Christine close this out. What is the one thing, Michael, that you want attendees to take away from today's discussion?
Well, I want folks to take away that the future of money is a basket of currencies, and that it's very clear, given the stats we've heard from Christine and others, that the consumer wants choices. And a basket of currencies is not going to happen tomorrow. It's a reality today. And that's where the data is going. And so I really see the future global wallet, David, of those three buckets of currencies living alongside each other for efficiency and equity of the consumer.
Basket of currencies, living together in perfect harmony.
Exactly.
And
I would say, David, the one thing I want folks to take away from this session is you haven't missed it. Trust me, you have not missed it. We are still very early. Go out, find some of that open source content and get familiar with digital assets, because we're just getting started.
Well, Christine and Mike, you have been phenomenal resources. You're so knowledgeable. I imagine you're willing to speak to folks offline. we at Fidelity can, help navigate the audience members to you. But with that, I want to thank you on my behalf, and then turn it back to our host and very good friend, Rick Edelman, who made all this possible. So thank you, Rick.
Thank you very much, David, Christine, and Michael. That was terrific. And again, special thanks to you, David, and Fidelity for being the premier sponsor of today's event here at Vision. That was really wonderful. And we are moving on to our next session now, securing your digital asset investments. Heavy emphasis on the word securing. So join us in the next Zoom chat room. We'll see you there.